Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets buried in your favorite company's filings. And today we are diving deep into MSP Recovery, Incorporated. Get ready, because we're about to decode some interesting financial maneuvers and a leadership shuffle at this company. Before we dive in, if you love getting these clear, no-nonsense breakdowns of important financial documents, make sure you hit that subscribe button. And we've got a fantastic community forming on our Discord server where we discuss these filings in real time. The link is in the description below, so come join the conversation. Alright, we are looking at a Form 8K filing from MSP Recovery Incorporated, which is essentially a report for significant events that shareholders should know about. Think of it as a company's way of saying, hey, something important just happened and you need to know. This particular filing covers events that took place around October 2025. Now, these reports can sometimes be a bit dry, but we're going to cut through the jargon and get to the heart of what they mean for the company and its investors. Now, let's talk about what is actually registered with the stock exchange. They have class a common stock under the symbol MSPR, which is registered on the NASDAQ capital market. Then there are redeemable warrants, which are like options to buy stock in the future. And they have two series of these, MSPRW and MSP. RZ also listed on NASDAQ. These warrants represent potential future stock issuances, and the price at which they can be exercised is a really crucial detail. MSP Recovery Incorporated has checked the box indicating they are an emerging growth company. This means they can take advantage of some regulations that were designed for smaller, newer companies, like less stringent reporting requirements for a certain period. It is a common status for companies that are still growing and establishing themselves. Now, we hit the first major item in this report, which is about a material definitive agreement this company has entered into. This isn't just any agreement, but specifically a Yorkville Second Supplemental Agreement. Back in November 2023, MSP Recovery signed a Standby Equity Purchase Agreement, or SEPA, with a company called Yorkville. Basically, this SEPA allows MSP Recovery to sell its stock to Yorkville, up to a whopping $250 million over time, but only if MSP Recovery decides to do so and under specific conditions. Part of this deal involved Yorkville making advances to MSP Recovery in the form of convertible promissory notes. These are essentially loans that can be turned into stock. They initially agreed to advance $15 million. The company has already issued notes for $10 million in 2023 and another $5 million in 2024, so they have been tapping into this funding to help with their operations. And now, on the 10th of October 2025, they entered into a second supplemental agreement with Yorkville. This new agreement allows for another round of funding up to an additional $3 million, again in the form of convertible notes. They can draw down these funds from time to time as they both agree, and as long as certain conditions are met. What is important here is that these advances come with a 10% original issue discount. This means for every dollar they borrow, they effectively only receive 90 cents, which is a cost of capital. Here is where it gets really interesting. Yorkville has the option to convert these convertible notes into shares of MSP Recovery, as common stock. They can do this at a conversion price that is either a fixed price or 95% of the lowest daily trading price over a 5-day period, whichever is lower. However, there is a floor price, a minimum conversion price, to protect the company from extremely low valuations. And crucially, they do this in a way that does not cause Yorkville to exceed a 9.99% ownership limit. This conversion feature is a key part of how Yorkville makes money and how MSP Recovery gets its financing. And in a rather significant move as of the 10th of October 2025, that floor price for converting these notes into stock was lowered from $1.2 per S-share to $1 per S-share. This means Yorkville can now convert their debt into stock at a lower price, making it potentially more attractive for them to do so, and diluting existing shareholders more significantly if they choose to convert. This change in the floor price often signals either a company needing more capital at any cost, or a lender seeing greater risk and adjusting their terms. Moving on, we have a change in leadership. Alexandra Plasencia, the General Counsel, has resigned from her position. Her resignation is effective the 17th of October 2025. She will stay on until the end of November to help ensure a smooth handover of her duties. The filing explicitly states that her resignation is not due to any disagreements with the company, its management, or its policies. This is usually stated to reassure investors that there are no internal conflicts driving the departure. Finally, as is customary with these reports, they list the exhibits filed alongside the report. Here we see the Yorkville Second Supplemental Agreement dated the 10th of October 2025, which we just discussed, and the interactive data file for the cover page. Now, pulling back to get the big picture, MSP Recovery seems to be actively managing its financing needs through this agreement with Yorkville. The convertible notes offer a way to get cash injections now, with the eventual conversion into stock providing a path for Yorkville to gain equity. The adjustment of the floor price is a critical point to watch. It suggests a potentially more challenging environment for the company S stock valuation, as the cost of capital for Yorkville S financing has effectively decreased. This could lead to more dilution for existing shareholders if Yorkville decides to convert a significant amount of notes into stock at this lower price. The resignation of the General Counsel, while stated to be amicable, is still a leadership change in a key legal role, and we will need to see how the company navigates this transition without a permanent General Counsel. Looking ahead, MSP Recovery faces the fundamental challenge of growing its business and generating profits to a point where it is less reliant on these types of financing agreements. The ability to execute its strategic plans and demonstrate a clear path to profitability will be paramount. The company's success will hinge on its ability to leverage its capital effectively and navigate the equity markets, especially with the potential for increased share dilution. So, what is our take? MSP Recovery is in a phase of actively seeking capital, and the terms of their agreement with Yorkville, particularly the recent floor price adjustment, indicate some pressures. The company needs to show strong operational execution to justify its valuation and to manage the impact of potential future share issuances. Are these moves a sign of growing pains or a strategic necessity that will ultimately lead to success? Only time and future filings will tell. What do you think about these latest developments at MSP Recovery? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more in-depth corporate analysis. And don't forget to join our Discord community for more lively discussions. Thanks for watching, and we will see you in the next episode of Corporate Decoder.